Howdy, Jacob here. Today we're going to do a present value of companies update. I looked and I haven't done it since March 20th, and I said I wanted to try to do once a month. So I think now at the beginning of each month, I'm going to try to go through an update on the companies since I review roughly two companies a day. Home months should be 55 to 65 extra companies reviewed. And so it might be helpful also in the span of a month. There might be some very big variations in stock prices, which could either go into a positive direction or negative direction for us. But I do want to go over it. So I just started my generic stock screener. No companies are within 15% there yet. And for the fundamentals, which is the second group of screenings that I did, this is at the top left. You can see some of the screening limitations that I did. So earnings per share growth over the next 5 years is profitable. Their forward P is positive, and then return on investment, asset and equity, but all above 15%. And I limited the companies that are within 25% of the purchase price. And again, that's because my discount rate is 15% over a 7 year period. If it's within 25%, then it's roughly about a 10% return. So these are companies that I think will have a decent chance of giving you a 10% or greater return on investment. And again, I'm probably going to be wrong on 40 to 60% of these, but the ones that you do a deeper dive on and that you feel most comfortable in are going to be companies that are best for you. And so if we look at this, we see the company The Buckle. I've seen this company on the Magic Formula Investing quite a bit. And again, that's not nothing I say will be just buy this, don't buy this. This is just so you can see some of the companies I've already reviewed. Maybe look at the videos if you want to see some of the things I talked about, or more so you can just do your own research. If this is the only video you see a month, that's perfect too. That just shows that you see the videos that are within possible buy prices of mine, and do your own research on them, see if they make sense for you. And again, these are not prices that I'm necessarily buying them. I'm going to do more research. When I do my initial videos, it's just off numbers. When I do an in-depth research, it's basically just off the quarterly reports, the numbers, because it's additive, the quarterly reports, and then the most recent 10K. If it's a buy beyond that, if I think it's a buy beyond that, I do look at previous 10Ks, 10Qs, see whether the management is the same or not. And if it is the same, see kind of the decisions that they've made and what they've said and have they actually done it or not. So again, I don't do my full analysis on this because, again, I don't want anyone to buy anything just because I say that it's a good price or not. I'm just some YouTuber. Yeah, I've studied thousands of hours through books and audiobooks and interviews and everything when it comes to investment, and I'm risk analysis, very risk management as an actuary. But I don't think everything I say will be right. And like I said, a good investor is wrong 40% of the time. And so there's a good chance a lot of these companies are not great, but that's why you do your own analysis. And so let's go over some. So the Buckle, again, like I said, I've seen on the Magic Formula quite a bit. D Local is a company that I have done a deeper dive on. If you see a shade or a highlight, that means I've done deeper dives on these companies. If you want to look them up, or again, do your own research. D Local is what I would say is kind of like a mix between like a PayPal and a MasterCard, but strictly for international. So like it's a MasterCard, Visa, it's a PayPal thing, payment transferring company. And I think that in my perspective, the growth is greater than what is currently priced in. And so that's why it says that it's a good buy right now. I have personally done more research on this. And I think that it is a fantastic company. We have Enter Plus. I haven't done more research on it. Fortinet, definitely a fantastic company. I've definitely looked at that. It's the numbers were fantastic. I haven't done a deeper dive yet though. H&R Block, I think, has been to a price recently, at least, that was said it was a buy price, but I think it's gone up quite a bit recently to the fact that I haven't done I haven't done research on it. But H&R Block is really everywhere. They're retail space, but I think that the Intuit is definitely a hotter company, but I mean, really, they do very similar things to an H&R Block. InMode, I've done a deeper dive on. They are pretty much pharmaceutical company. My skepticism there was that I think they had like one or two suppliers, and so I was a little hesitant the fact that if they went under, then it wouldn't be anything of their fault, but just the fact that their supplier went under just had me do a bigger margin of safety. But I do still think that it is pretty close to a buy price. MPX, I don't know all these companies because, again, I've looked at the numbers for some of them, but Robert Half, Shoals Technologies, Steel Dynamics, I want to do a deeper dive on soon. Alta Beauty, I just posted this video, and Alta, fantastic company. I think it's similar to, it has a similar vibe of Starbucks to me, where I think that due to inflation, they'll be able to increase all the store sales that they have 3 to 4%. And then I do think, due to them being retail, they'll be able to put down 3 to 5% of extra stores a year. And I think that can easily go to the top line and very likely the bottom line. They are expanding into Mexico, and I think that gives them a great opportunity since they're only in the United States. The only thing I'm skeptical of there with their expansion is that once you go to outside areas, you don't necessarily know it's going to work. I know in the video I brought up a See's Candy example from Warren Buffett and Mohnish Pabrai, where they said they've expanded See's Candy well beyond California in multiple instances, but it hasn't necessarily been the same as California. Where in California, they can increase the price 10% on the product, even though inflation was 3%, and they see no decrease in demand. They have not seen that at other locations. Comcast, haven't done a video, or I don't necessarily know exactly what they do. NVR, again, I own Orion's Homes. Orion's Homes Home. I did the same thing in that video. But I do think NVR itself is a great company. I think they put up houses a little too quickly, but I think their ability they don't necessarily own the land. They just have a right to put up the thing. So they're very low on inventory, which is a good thing for a lot of home builders who really just buy a bunch of land, and then if it doesn't sell, they're screwed. They have these contingencies in there where they definitely don't screw themselves, and they've historically bought back a lot of shares. Then we have Tenaris. Dividend yield, we also have quite a bit. Again, the highlighted ones I've done reviews on. So we have Ambev, Best Buy, BG Staffing, Bassett Furniture, B2 Gold Corp, British American Tobacco, Cracker Barrel, Dime Brands, Great Television, the Interpublic Group, Janus Henderson, Leggett and Plate says it's a buy now. The thing about this is that they've actually reduced their dividend. This was, I think, one of the dividend studs out there that was there for 50 years. They still have a dividend, but they actually reduced it from like $2 to like 20 cents, and they're really focusing on that debt reduction. And so, again, maybe I'll do an extra video some other time when I've already done a deep dive to come back to some of these things. But that's one thing to point out. Medifast, they also took away their dividend. I believe it was like $6 a share, and now it's nothing. They're reinvesting into GLP-1s very heavily, and primary care physicians through LifeMD, where instead of the Medifast model where you get a coach and you get food products and everything, you also get primary care physician to be able to give you GLP-1s, and then in conjunction with the drug, because a lot of people take the drug and within 6 months after they've done taking the drug, they gain all their weight back. 6 months to a year. I've watched a lot of GLP-1 videos just for my work purposes, and I do think that the Medifast model can make a lot of sense. I do think there's some risk there with them. The demand for it can grow a lot with their coaching model, but also detriment them. And we've seen recently that demand has been detrimented heavily by it. Marine Products, New Skin, I need to do a video on soon. Premier, Douglas Dynamics, National Steel, I need to do a video on soon. SK Telecom, Tapestry, Vodafone, Westlake, Western Union, Xerox. So again, I just wanted to do an overview of the companies that I've looked at and are within 25% of a buy price, meaning that they should give you roughly a 10% return. Again, I'm going to be wrong on a bunch of these. Please do your own research. And this is just to go through my months of review that I've done and all the companies that I've reviewed. But I do hope you enjoy the video and have a fantastic rest of your day. Thank you.